What are you going to need to see in this economy and in the financial system, for that matter, to get to a point of comfort to raise interest rates again?
Well, let me first say, and I think this is important to say, when you use the second person, I'm taking that as a second person singular. When you said, what do you need to say, I'm going to speak about what I need to say. I think people understand it.
You don't speak for the Federal Reserve.
I do not speak for the Fed. Only Chair Yellen speaks for the Fed as a whole. But I think it's useful to give a little context here. I don't think of this as a normalization process. You know, people sometimes write about it, talk about it, using the term normalize or normalization. And I don't believe that there's some target that the Federal Reserve should be moving towards. What the right level of interest rates is depends upon the manifold factors that are affecting the economy in the short term and over the longer term. So for me, it is a judgment as to how, taking a pragmatic look at things, how we can best pursue the dual aims of maximum employment and price stability. Were the economy to pick up, more rapidly, which would be, I think, a welcome development, we have the tools to respond appropriately. But were things to slow down, we obviously would face a more limited set of tools. And so for all those reasons, I have, for some time now, this is not a Brexit-driven issue, for some time now, I have thought that it was the better course to wait to see more convincing evidence that inflation is moving towards and would remain around the 2% target.
So you don't sound like an individual who's anywhere near being comfortable raising interest rates again.
Well, I certainly, to this point, have not seen that kind of evidence. But I think, you know, for the audience's benefit, John and I were talking before the session got started about correlations which may have prevailed, you know, for some period in the past, which maybe aren't prevailing anymore, various labor market correlations, things in markets and the like. And I think under those circumstances, one needs first not to have some sense that there is a normal rate of interest to which we're moving, but also I think one has to have a sense of being sensitive to the things that do happen. And I hope that I will remain and expect to remain sensitive to indications that perhaps things have picked up, that things are picking up. And if I saw developments suggesting that inflation really was moving.
Core inflation has risen. We were talking about this earlier.
Yeah, it's risen modestly. It was off of 1.2, which is well below where we need to be.
Yeah.
But I would want to be more convinced that the underlying rate of inflation was around 2%, not simply that, you know, the fact that oil prices are not declining anymore has taken some of the downward pressure off.